The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis, from the offices of Duke & Duke, 100 South Broad Street, Philadelphia, Pennsylvania. Folks, we have a situation at the United States Treasury where they're going to be changing the pictures on our currency. Our $5 bill, Andrew Jackson, is going to be replaced, and also they're going to replace a couple other things on the $5 bill. Andrew Jackson is on the 20. That'll be replaced, and then also on the $5 bill, they're going to replace that, and then they're going to replace the Independence Hall with a picture of Dr. Martin Luther King. These things, I believe, these currencies. This is my opinion. They should be reserved for presidents and founding fathers. That's the way I believe it, but that's neither here nor there. We'll move on to the next thing. One of the big things in the news here in the United States over the weekend was the fact that the Chinese have been using beautiful young girls to promote stocks. They would come on just like we have our CNBC. They're all about 20, 22 years old, and they're telling all the folks how wonderful these stocks are and giving them the fundamentals of what they need. And, of course, they usually go the opposite way. And certainly that's getting a lot of juice. Several of our folks here at TFNN have asked me to have these analysts on, but they don't speak English. So that might be a good thing, as a matter of fact. We'll have to wait and see. Okay. All right. One of the things I wanted to mention today is we're going to have two really neat guests on. Tomorrow we're going to have John Person. John is really a great guy that uses pivot points extremely well. And then on Thursday, we're going to have more research on. One of the chief analysts for Steve Moore is going to be on with us, and we'll have a lot of fun talking about some of the things they look like. They are the premier people that work with seasonality and spreads. There's really no one any better than they are. So we'll be having those on the line on Tuesday and Thursday. When we're talking about currency, they make all these changes over there. If you remember years ago, we had the Susan B. Anthony dollar, and the problem was it came out as, almost exactly the same as a quarter. And so people that were, visually impaired, they were not able to understand what that, what that coin was, and that's why it fell into disrepute. We've had the same thing with that $1 gold pieces that they put out. Same thing. They're just very difficult to keep going in the currency. Why people at the Treasury don't understand this, I don't know, but that's neither here nor there. We'll move on to the next thing. The first chart that I posted into the Tiger Den today is a chart of natural gas. I was listening to John Logan and his guest talk about natural gas, and as you can see, it's got a very symmetrical pattern. You can see the big ABCD pattern that was right on the bottom, and since that time we've had a nice move of different ABCD structures on the way up, which is also very nice. What I was listening was the fact that some of these numbers that John was talking about were right at those levels that we were looking at. So this was giving a visual description of what was actually happening in natural gas. Now, it doesn't always happen that way, but last night, natural gas made a 61% retracement and then dropped, a great deal. Give me 1 second. I thought I put it in there. Oh, I did put it in there. Why did it not come up? Hello, Federal. This is not a good thing. Where is it? I just put it in there. This is not good. 1 second here. There it is. We'll put it back here in a second. Little technical difficulties here, folks. and then we'll bring this up and we'll take a look at it. Okay, and as you can see, we had a really nice ABCD pattern starting at the end of March, and we went up to the high last night, which came in at 2.17, and we're now trading at 209. So it's backed off 8 cents, from that level. Now we're up 8 days now, so we're looking for a nice correction. There should be some really good support down around 196 in natural gas if it gets down there, because that would equal the last corrections that we've had. Both of those were equal, the one in March and again the one in April. And we also had that 20-man line that was on there. We talked about this on one of the shows about a month ago, and that was right at a 61% retracement, and away it went to the upside. Now the 61% retracements, we talk about 618, 786. Folks, these numbers are just numbers that allow you to look at a pattern so that it tells you whether you think you're going to be right or wrong. You never know whether you're going to be right or wrong until you are, but that's basically it. So keep in mind. Now, we've had a question from someone, and that's about when we talk about these markets making tops and bottoms, one of the things that we like to talk about is the fact that the 3 drive to a bottom pattern and 3 drive to a top pattern. What we're looking at here is the 15-minute chart on the E-mini, including the overnight session starting last Thursday, going through Friday and then through Sunday. You'll notice that on last night, we made a 3 drive to a bottom pattern in the E-mini S&P. You'll see we actually opened higher up at the 2090 level and then sold down to the 2074 level. That was a perfectly symmetrical pattern for a 3 drive pattern. And I mean, if you look between your major lows on this from the from the 21st, the one we had again on the 22nd, and then the one we had last night, they're perfectly symmetrical in time. And we do have the extensions of 1.27 from the previous swing. So that makes it very nice as far as the symmetry. And you can see after that happened, we rallied 11 points up to the 61% retracement at 2085. That tells us that we are looking at a potential here that if this should break to the downside and we get below 2074, we are going to go down a great deal. Now, right now, as we said, we're down about 25 handles from the high, which was at 2106, actually 31 handles. So we will see that was at the low. We're down about 25 right now. So we'll watch that very, very closely. Across the globe last night, we had a slight bit of weakness in Germany. The UK was about unchanged. That was probably due to President Obama telling them how important it was for them to stay in the Eurozone. I imagine we're going to be in the Eurozone too one of these days, so that's something to look forward to. 877-927-6648.
John Logan has just announced that he is hosting a workshop Wednesday, April 20th for all TAS Profile Scanner Plus subscribers, opportunities in the current market, and strategies to profit. In this hour-long workshop, John Logan will use the TAS Profile Scanner Plus to give you a current breakdown of the sectors in the market and the opportunities that are present, as well as providing subscribers with the best strategies to trade with to profit when using this powerful piece of market scanning software. Right now, you can sign up for the TAS Profile Scanner Plus at the front page of TFNN.com. The TAS Profile Scanner Plus is such an amazing piece of software that we're even offering a no-questions-asked money-back guarantee for all new paying subscribers. Don't delay, as John Logan's subscriber event is coming up soon. Sign up now for the TAS Profile Scanner Plus and be up and running within minutes using this powerful piece of market scanning software. With a 30-day money-back guarantee, you have nothing to lose. Sign up today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we are going to take a look now at the Treasury notes and Treasury bonds. I've posted the chart for the Treasury notes. This is the largest of any of the commodities that we trade as far as the volume and open interest. These are huge, many times bigger than the S&P. But if you'll look at this on the far right-hand side, you'll notice that we have a Gartley forming down here near the lows that we made yesterday. So a slightly lower low today would be right in the ballpark of a pretty good spot to look to buy the notes. We are in an uptrend here, no question about it, because we have higher highs going back to last April, and then we have higher lows going back to last June, so that sets it up pretty nicely. But it hits the numbers very nicely. As you notice, after the high was made in February, we came down to a 61% retracement. Then we went up to a 61% retracement at the high up there, 131.08 that we made earlier in April, around the 1st of April. Now, if you'll notice on those two numbers, you'll see 65 and 64 as the fib numbers. Well, remember, this is within hundreds of decimal places, so it's pretty hard to get filled within 100th decimal place, so it's pretty much spot on as far as the numbers we're looking at. But the number we're watching here in the notes today is at 129.11. So keep an eye on that, because your stop has to be placed below the 786, which would be 128.22. So that's certainly acceptable move in the Treasury bonds. Now, I wanted, since we're on the talking about risk here, when I was on the floor of the exchange in Chicago way back in 1982, I went back there in January of 1982. They started trading the S&P on April the 16th, 1982. But when I was applying for your seat, you had to go through a rigorous evaluation process, your experience and all that kind of stuff. And, it was really very intense. And then you had to go through an interview with 3 of the CME members. And then finally they voted, and then you were either in or out. And that's the way it went. But after everything was approved, you couldn't trade the first week. They took you to a class showing you how to do the hand signals. You know, if you put your fingers above your forehead with a 2, that was a 20. But if you just raised your fingers up in the air with 2, that was just 2 contracts. And if you wiggled your fingers really fast, that was 200. And anything over 200, you had to physically walk up and grab the other side of the trade and tell the person what you were doing. Because the problem was out trades. In other words, someone wouldn't recognize a trade they did with you, and so that trade's hanging out there. And if you sold something and it went way down, you made a lot of the other person that sold it to you doesn't recognize the trade, and then you were, you know, totally out of commission. We don't have that problem anymore, folks. We have electronic trading, and everything is faster than a, you know, a rabbit on fire. So this is really a great thing for you guys, because everybody's a floor trader now without the you know, the hassles of out trades. Plus, you can work from your home, so it's really a good idea. But during one of the classes that we had, the guy named Harry Mikas was one of the better traders on the floor, and he talked to us about, there were 6 of us in this group, about, you know, what was important down there. And the main thing he talked about, he says, you want to trade not to lose. He said, you got to focus on what you're risking every day. So this is your inventory. He says, it's just like you're in the shoe business. You've got too many black shoes, so you've got to put them on sale. Don't have enough brown shoes, so you've got to buy some. And he said the whole thing was about not losing very much. And he said that's the whole key of what you're looking at. And you must train yourself to trade, you know, defensively, so that you're able to protect your capital, because that's the main thing. Because you lose your capital, you're out of business. And if you're undercapitalized, you're leading to, you know, bad decisions, like, you know, you have to make a certain trade, and that doesn't work either. The other thing he talked about was don't be afraid to take a profit. This is a business of making money. He said it's not a business of being right or wrong. Mark Douglas used to, you know, drill that into people, is the fact that you have to be able to pay yourself, you know, for being right, and that's the whole thing. Remember, we never know how much we're going to win on a trade, and we never know whether the trade is even going to be a winner or not. We never know those things. So why do it? Well, the answer is because you have your positive expectation of winning when you have a certain you know, methodology. And the second thing is the only thing you can control in the equation is the risk part. The reward part, you just don't have any control over. So you got to focus on the risk part. That's the real important thing. And one of the things Harry talked about to really make money was don't be afraid to reverse your opinion. He said if you're wrong on something and you get stopped out, he said that just means it's you got to go with the direction that you're looking at. He said what people do, he said, and you don't want to do this, he says, is you add to losers. He said if you add to a loser, you're basically breaking every tenet that you can possibly have as a trader. First of all, you're wrong on the trade. Second of all, you're increasing your risk exposure. So both of those things are just absolutely wrong as far as money management goes, you know, with the process of trading. So those are some of the things that he talked about. But the most important thing that he talked about was something that I was able to implement, and that was called the 3-day rule. When I came to Chicago, I was able to sit down with Barry Lind. I traded through Lind Waldock. I actually bought Jack Waldock's seat, and it was a really great experience. And he asked me, he says, what can I do to make your stay here in Chicago fun? And I said, you know, if I have a position on and I'm in the 3rd day and I have a losing position, just take it off. Don't even ask me. I don't even want to make the decision. He said, yeah, we can do that. So 4 or 5 times during the, you know, the time I was there, they would come up to me and tell me, hey, look, you're out. You're out of this position. And every single time, all I had reversed, and it would have made a lot of money. But reversing, I have a difficult time with. I've been working on that for 50-some years. Hasn't worked out too good yet, but I'm still working on it. The problem is after you reverse, where do where do you put your stop? And then you've got to go to your charts to determine, whether you're looking at it. But when you're trading patterns like we do, if you break through the 786, there's a high probability that the market's going to go, to the 1.27. It's probably better than 70%, so that's a positive thing. And also you're forced into trading with the trend because you've broken above the 786, so you're above the 618, you're above the 786, and your targets would be either the 1.27 or the 1.618. So it makes common sense to do that. My strategy is that once I get out of those, I just look for another pattern, and that's worked. And it's either one way to skin a cat or not. I don't know how it works, but that's just my methodology of what I'm looking at when I'm watching these patterns. So I think it's pretty important to really do that. And the last thing that Harry talked about was to have some type of a system. He said, have some way that you can look at the markets, whether it's point and figure or moving averages, whatever it happens to be, that gives you some type of advantage. You need that system with an advantage. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we have just hit the 1.27 mark. So we're going to continue to trade. 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 Okay, we're back, folks, and we have just hit the number in the notes that we talked about, that 129.11. So keep an eye on that. It might be interesting to watch if you're interested in buying notes or bonds. It should not get much below that level if it's going to be any good or not. So we'll watch that very, very closely. Now, the next thing we need to talk about, I believe, and I feel really strongly about this one, and that is the gold, and we'll do gold, and then we'll do gold and silver, but the main one we're going to talk about here is this gold market, because it's set up so nicely. Whether it's going to happen this way or not, I'm not sure, but nobody else is either. So let's just look at it here quickly. You'll notice here over the past 9 months or so that we've had a big move off of the 3 drive to a bottom pattern that we had down there at that 1040 level. The real easy buy was the one around 1070. That's where we had the 135 pattern. Backed off to a 61% retracement off the January low. That was down around 1075. And then away it went. I didn't think it was going to get much above 1240, but we did get, to 1286. You'll notice the head and shoulders pattern that was there. That's just about as symmetrical as you can be. You'll notice that the left shoulder is nearly perfect to the right shoulder is what you should be looking at. And if it's really bearish, that right shoulder would have been lower than the left shoulder, but this one was just a little bit higher. So that's a one where you have perfect symmetry. And if you look at the time between the left shoulder, the head, and the right shoulder, that's another thing that gives you an idea of that's where you are. So at that right shoulder, you were at the 78% retracement at 1272, and you were equal in time between your left shoulder and your right shoulder. That gives you the symmetry. But what we're looking at now is, and you can see the ABCD pattern, we got down to 1229. We rallied about $10 an ounce overnight, and so far this morning, I don't think any rally will be more than $34. Would be my guess. That would take you up to the 1255 level if it were able to do that. But to me, what it looks like is that ABCD pattern that's forming comes in around 1190 to 1175 level, which you also have a 20-minute line coming in at that point, and that's where I really think you have to put the pedal to the metal and watch the gold, because if we get there, we've got a lot of things telling you that this market has completed its first major ABCD correction since the bottom occurred, and it would be coming in exactly at the 382 level, another positive thing. So, this gold and silver markets, sometimes they pretty much changed. I think I had the gold chart in there. I think it came up. Maybe it didn't. We'll put it up again. Hold on. We'll make everybody happy here at TFNN, and we'll see what's happening there. Okay, there's your gold chart that we just went through, and it should be easy to see that we're looking at this level of 1190 in gold. That's 43 bucks, well, no, more than that, $47 from where we're trading right now. But as you know, gold can make that very quickly. Ideally, you'd like to see it come down very quietly to that level, and we'll watch it. Now, we've had some things happening in the open interest in gold. On Thursday, when we had that run up to 1272, we actually had a drop in open interest, and then the next day, it went back to positive. But the rate of change of the open interest is what's important. In other words, there's a lot less buying coming into gold as it went higher, and that's usually not a good sign. So that's just a technical picture of what we're looking at. Next, we want to take a look at the silver market. What we're going to do here is we're going to look at this on a weekly basis, because we'll see what we're watching here. And you'll notice that we've had, over the past several years, we've had rallies of $4 an ounce. We've had two of those, one back in 2015, and then we had another one just recently, and they were both spot on at $4 an ounce rallies. And now we'll be looking for a potential correction in this. Now, silver is getting pretty thin out there, folks. Even though it's having some big moves, your stops are not going to be honored, because the if there's just nothing there, they're going to go through those stops by 10, 15 cents or even more. So you got to prepare yourself that if you're doing that, you're going to have a pretty good slippage. Now, in the grain markets, we had this big move on Thursday where the market was way up, and then beans dropped 50 cents a bushel, wheat dropped 50 cents a bushel, corn dropped 25 cents a bushel. Those traded relatively calm. I was talking to Rich Anderson from Anderson Capital Management, and Rich told me that, he had people that were involved with that and had their stops in, and they were filled either spot on or with very little slippage. So that's very important. If you'll remember, we had Rich on Friday, and he told us that the soybean crop was traded on Thursday's action. In other words, the whole amount of soybeans that we produce each year, which I can't remember the exact number of bushels per acre, but that whole thing traded in one day. And in soybean oil, the record open interest that we're having in soybean oil is 20% higher than any year where we've had, trading in soybean oil. In other words, 20% higher than the greatest year we've ever had. So that's tells you what's going on in some of these markets. Now, when you crush the soybean, you come out with oil and meal. It's about 20% oil and about 80% meal. And there's a little bit of, not overrun, but scrap stuff, which is used basically for feeding in hogs and stuff like that. But it's really mainly the meal that makes the market run. That's the oil is secondary because of the fact that it has less quantity. So this market could just be starting in the beans. We want to watch that, but it'll tell us what it's going to do. The last time we had one of these moves, it went straight down and made new lows. So we've got to be waiting for the next ABCD signal in the beans and the corn and the wheat, and then we'll have a chance to look at it. We do believe that we look at very, very closely. Mr. Z has told it we have 60 pounds of beans, you have 47 pounds of meal, 11 pounds of oil, and 2 pounds of waste. So that was pretty good with the 4-to-1, but I had the numbers off just by a little bit. But that's what you really want to keep an eye on. We want to wait for a nice ABCD pattern because that allows us, to quantify, where we want to buy. We want to buy where AB equals CD at hopefully a 61% retracement or 786 at worst, and possibly if it's really bullish, like we have a potential in gold here, to come in at around the 38%. So that's what we're looking at. Whether that's going to unfold or not, we're going to be, going to see what's going on. We've opened in stocks. We've held up, relatively well. We're still down just a little bit in the S&P. The Nasdaq's about unchanged. The Dow's down just a very small amount. 877-927-6648.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, folks, we're going to switch our programming just a little bit here to take a look at August cattle. We had Rich Anderson on, and he talked about, it was on Friday, he talked about the cattle on feed report that was due to come out after the, right before the close. As you can see here, that we've had a big drop here in the market for cattle. They dropped the limit down, and they stopped exactly at the 1.27. But the important thing here, folks, is when it's limit down like this, you have a very long-ranging bar, and you don't have to be a rocket scientist. Wait for this market to form a couple of tweezers or dojis or something to show that there's some support there. You don't want to just stand in front of that freight train. That's not a good thing to do. However, if you look below the 127 level in the cattle, you'll see that we're going to be looking at about a 107 level, and that's pretty much spot on with what Rich was talking about, because cattle are getting down now to a very, very reasonable price. Remember, these were trading in the 160 level a long time ago. I guess we're having a little bit of technical difficulty. I didn't do anything. Oh boy. Now it's a little better. What I did was I sneezed and I raised my, sorry folks, I raised my microphone so to not hear the sneeze, and I forgot to put the thing down. Sorry, folks. Anyway, if you'll notice that 107 level there in the cattle, you'll be spot on, a good place to look to be a buyer there without risk of more than a couple of cents. That's the way it would look like. Okay, so we'll watch that very closely. We've had a request to take a look at Softy, Microsoft. This has a very, very interesting pattern. It has a whole lot of patterns. In fact, you could do a technical book on Microsoft. You'll notice that on the left-hand side of the trade, we made the 1, 2, 3, 4, 5 expanding triangle. Then we broke down from 49 down to 38. We had and when it hit 38, it hit it twice. You had 61% retracements coming from the 2013 lows at that time, and then you made a 1, 2, 3, 4, 5 expanding triangle up at the 57 level. Then you confirmed it with a double top and a butterfly pattern, and then on Friday, the stock evidently had some bad news, and it gapped down about 10%. I don't know, it's down a little bit more today. So that tells you pretty much that might be over for Microsoft for a while. What you'd be wanting to do is if you get a rally up into that 54, 55 level, that would be a retracement back into that gap. and that would be an interesting place to contemplate a short sale in Microsoft, because this certainly looks like, with all the patterns that are there, that it's going to be an interesting thing to watch. Because if it gets above 58 now, look out, because this thing could really go. But right now, the evidence that we have tells us that we do have that double top formation finishing along with the butterfly that occurred since the middle of March, and that tells us we're pretty much heading down. We made a 61% retracement of the move since the beginning of the year, but we did that in one day on a gap down. And when the market gives you that much, it's trying to tell you that it wants to give you some more. So I wouldn't be a buyer of softy in here just yet. I think it's got a long way to go to the downside. So that's what we're watching. Now, there's a great deal of symmetry in the market, folks. And symmetry, what I mean by that is time and price coming together. If you'll take a look at the newsletter this week, I spent quite a bit of time looking at some of these charts and showed you the symmetry between all the different markets. The main one, of course, was the head and shoulders pattern that we had in the NASDAQ, and we will put that up here to let you take a look at it. And it's also in play. Here again, you can see between highs, we have a great deal of symmetry, and then the last high came in at the 78% level. That also tells us that this is a good pattern, but there's others too, and I can't go into all of them because it takes away from other things we want to cover on the show. But if we just looked at the S&P, just to show you how things can work this way. Remember, the S&P, that's only 500 stocks, and they're cap weighted. So of those expensive stocks, I'm talking to ones about the, the Goldman Sachs and the Facebook and some of the others. You'll notice that the BC swing that we had off the August lows and the CD swing that we're having right now, they're exactly equal in their lower tops from going back from July through November, and where we are now, they're lower highs, and the two rallies that we had were exactly equal. If you take the time, and I recommend you do, go look at the New York Stock Exchange Index and see what it did, and then go back and compare what happened in 2007, and you're going to see some pretty interesting similarities. So that's something that you should put in your homework for today, is to defy human nature and do the work yourself. We have the same situation going on with the Dow Jones Industrial Average, similar to that S&P chart. And what we've talked about here before, there's 100 stocks that are moving this market. You've got 25 stocks in the NASDAQ. You've got 30 stocks in the Dow Jones, and the Dow Jones is the easiest one to manipulate because it's only price weighted, it's not cap weighted. And so what you're watching now is the fact that of these 100 stocks that we're looking at, they're not going up like they used to. In fact, the FANG stocks, the Facebook, Amazon, Netflix, Google, and Starbucks, are all looking very, very negative. They're in downtrend. Some of them, very much so. So you want to watch that. Keep that on your your radar to be able to look at it. Just to give you an example, one of the better stocks of the FANG stocks is Amazon, and then you can see that it made a 707, very close to the 61% retracement of the whole move back. That's an interesting one. And then we also we've had a request to take a look at Facebook, and we'll do that right now. And you'll also see, when we're looking at Facebook, you'll be seeing a market that also has made a 3 drive to a top pattern. It's also completed the double top, and now we've had lower tops ever since the 1st of April. So that tells us that we're looking at a price in Facebook somewhere around the 100 to 95 level for retracement of this last move that we had. But it has some beautiful symmetry here. We have the 1, 2, 3 drive to a top pattern, and that's followed by the double top, much like we saw when we were looking at the other stock that we were watching earlier this morning too. So that's going to be very important to keep an eye on. Okay, we have another question about the grain markets. Folks, wheat broke and went below the 61% retracement of the whole move. Corn's in the process of doing that, and beans are selling off too. We had this tremendous turnover on Thursday. You've got to wait for a pattern. That's all you have to do. There's nothing here. If you're really bullish grains and you want to buy them on a pullback, this is certainly a pullback, but I'm not recommending that. Okay, we'll cover crude oil when we get back. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to take a look at the crude oil market now. As you can see, we've broken above those previous highs from March 19th. We haven't really ran away from that level, so that could be some really strong resistance at that $43, $44 per barrel level in the crude oil. But watch for a 61% retracement of that move that we had between 26 and 42. So we rallied about, $16, and of course 61% of that back would be 60%. So if we could get oil around the $36 a barrel level, that would be the place where you'd want to be watching it. If you buy a breakout, you really need to get it above $44 a barrel in June crude in order for it to make a what I think is an assault on the $50 per barrel level, which we could certainly make that, because as you can see from this oil chart, we are spot on to a ABCD retracement up to the 61% retracement, coming down from the high we made at $62 a share way back in last July. So that's the main thing to keep an eye on what we're looking at. When we started the show, we talked about the 3 drive to a bottom pattern in the S&P that came in last night at the 2073 level, and if we go below that, after we rallied 11 handles after that, so if we go below that, that sets up a target of 2065. So keep an eye on 2065, because that would be one that you would want to be watching for as a low of the day. The notes have actually hit that number that we looked at. They're still setting there. So watch what's going on, because if stocks start to, sell off quite a bit, there's going to be a risk off. And so when they take the risk off, they move their money into whoever they are. They move the money into the Treasury notes and Treasury bonds to protect the capital. And that could be a double-edged sword, watching it go both ways. So we'll watch it very closely here. But that level that we're looking at in the crude is very important, and also the level that we're looking at in the bonds. 877-927-6648. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.